Good evening and welcome back to Paisa Bolta है पैसा बोलता है में आपका स्वागत है Yesterday what happened was that TCS announced its results the day before. It was late evening and TCS stocks corrected 1%. The immediate complaint was that TCS had missed revenue targets and had done badly. Like I pointed out in my Tamil channel, if you want exciting growth, Indian IT industry is not the place to be. Indian IT industry is boring, steady, company which continues to grow between 10 to 15% every year. Between last March quarter and this March quarter, TCS has grown 15%. It does not require any more capital. It is throwing out free cash flow. Its profits alone after tax was well in excess of 11,000 crores. 72% of that was Tata's ownership, and so Tata owns 72% of it. They are not doing anything revolutionary. They are basically supplying people to work in other large corporates. Like in a case of a construction industry, you have masons, carpenters, floor layers, tile layers, etc. You have various application providers. These application providers are being deployed in various client places and billed at higher rates. This is essentially what TCS does. TCS does some product development and consulting. That's a very small portion of their business. You should understand how TCS started. In both Tata Steel and Tata Motors, in those days in 1960s, they were finding it very difficult to manage payrolls because several lakh people were working there. It took a lot of cash to be brought back and money released as salary. In fact, the moment 1 month's salary was paid, the next month's salary work had to start. It was a very difficult process. So JRD was himself looking for a solution. He heard about computers, big computers which would make processing very easy. He went to Unisys and asked for a computing machine. Those days, computers used cards, punch cards, and they had to be programmed. So he needed to find somebody who'd learn programming and help them form this company. The machines from Unisys arrived. He got founded a man called Fakir Chand Kohli, who was working in Tata Power and had studied at the MIT, Massachusetts Institute of Technology. FC Kohli became the first CEO of Tata Consulting Services in the late 60s. So India's IT revolution started in 1968. When Unisys saw that Tata Consulting's engineers were very good at programming, they referred them to their other clients and asked them to start programming for them. And that is how TCS started. Over the years, TCS grew as a division of Tata and Sons and made huge amounts of money. The Tatas used the cash flow that came from TCS to consolidate their holdings in other companies. What JRD Tata started to solve a small problem became a company which threw out cash for them to consolidate their shareholding in Tata Steel and Tata Motors and Tata Chemicals. Ratan Tata was always under pressure to list TCS. Everybody was asking him. Finally, 13 years after Tata's JRD's death in 2004, they did a public issue at a price of 850 rupees per share. The company listed at 1076. I remember in 2008, the price cracked nearly 90%. But those were fear, and if you had bought at those times, you have made a lot of money. The company has gone from strength to strength. The company has given 3 bonus issues of 1:1 after 2004 issue. If you had invested in the IPO at 85,000 rupees or even bought it on listing at 1 lakh 15,000 rupees, you would today have 800 shares worth 25 lakhs 50,000 rupees. So even at 1 lakh 20,000 to 25 lakh 50,000 in less than 20 years is a lot of money. You would have enjoyed 78 dividends totally, an average of 20 rupees or even 10 rupees, with some being very high. You would have made more than the 850 rupees you have enjoyed. You had invested. The dividends have repaid your investment in more than enough manner. Therefore, whatever you're holding stock is actually extra money. So this company has rewarded you both in terms of bonus issues and dividends, and there have been regular buybacks. It has more than 4,50,000 employees. 37% of them are women. It has 5,200 patents it applied for. It has been granted 1,350 patents. The company is very clearly pro-women and has employs a lot of people. The major clients for these companies are Google, Amazon, Bosch, IBM, Adobe, Intel, Apple, Oracle, and many more. This company has a geographic split of 52% of its business comes from North America. That is because they initially had Unisys as their partner. In Europe, it has 31% of the business. India is 6%, and the rest of the world is 11%. The company pays out 70% of its profits as dividend, and therefore this is a company which you should have because it keeps on throwing more than 40,000 crores of free cash flow. So growth itself is irrelevant. If the price corrects, you can keep picking the stock because you will get access to large pools of cash as a shareholder. The promoters, as I said, own more than 72% of the stake. Its market cap was more than $200 billion in 2021, and over the years will definitely grow bigger. So it is very clear that in because of macroeconomic conditions, if there is a correction in the price of these stocks like TCS, even Infosys is a similar story. Therefore, if there is a price correction because of macroeconomic headwinds, then it's an ideal time to buy TCS and Infosys. This there is a recent resignation of its CEO Rajesh Gopinath. It should not matter because it has deep pools of talent. Already you have Kirtivasan stepping in to take over this company and run it smoothly. Thank you for watching Paisa Bolta Hai. If you like this content, hit the like button of this channel, press the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Paisa Bolta Hai.